So how much money do you need to set aside for taxes? 30%. All right, we're done. Okay, just kidding. There's a lot more to it than that, but you will see a lot of people give you a rule of thumb to set aside about 1/3 of your profit. But that might not be the case because there's a lot more to it than that. Hey, my name is Mark Tu, and I'm a CPA and former reseller who specializes in helping resellers and online businesses with taxes and with growing their businesses profitably. And first of all, you need to know the basics of what taxable income even is. If you're a small business owner, then you will probably account for your business activity on your taxes on what's called a Schedule C. It's just a separate schedule of your main income tax form where you put your total income, your gross sales, and all of your deductible expenses. What's left over will be your net profit or net loss. If you have a loss, there's no tax on that amount, and that amount will be combined with any other income you have to reduce your overall taxable income. But let's assume you do have a profit. The reason people say to set aside 1/3 of it for taxes is because with the business profit, not only do you have regular income tax, but you also have self-employment tax. So let's start with that. Self-employment tax is basically 15% of your business profit. And then you add that to your income tax rate. And your income tax rate depends on what income tax bracket you fall into. But since it's a marginal income tax system, that means that not all of your income is taxed at the same rate. And you can check out this video to learn more about marginal income tax rates. So ultimately, you'll have an overall average income tax rate. It could be as low as 0%. Most people are somewhere between 10 and 20%. If I take that average, it's about 15%. Add that to the self-employment tax rate, and you have your 30% of taxes to set aside for the business profit, which is where people get that rule of thumb. But wait, that's not all there is to it. You might have income from other sources, a W-2 job, a spouse's job, a rental property, investments. All of those will be factored in to determine your income tax bracket, and you're likely already having taxes withheld from some of those sources. If your W-2 job historically has gotten you a refund on your taxes, that means you were over withholding your taxes. And now that you have a side business or some type of self-employment income, some of that refund you would have received can now be applied to the additional taxes generated by the business. So if that's the case, you don't need to set aside as much as you thought. And that's why it's a good idea to use a simple calculator like this one to estimate your tax liability. You should likely be doing that anyway, so you can know if you need to be making estimated tax payments or not. So let's do a quick example, and you can do this exact same thing, just use the link below. Okay, so this is just a calculator I like, and we can go through and populate the different fields based on our current numbers, our projected numbers for the year. So let's say we're single, let's say no kids, you could put dependents here. For wages, let's say I have a $50,000 W-2 job, so that's gonna be my salary for the entire year. And then I go to the next section, income from other sources. If you are a sole proprietorship or a single member LLC, you would put that as business income or loss. So Schedule C is where that activity goes on the tax return. And this is going to be your profit, not your gross sales. So let's say you expect a $20,000 profit. Then we skip down, no rentals. So nothing in here. So those are going to be the main fields that you fill out. And let's say you take the standard deduction, and then you also get a deduction for half of the self-employment tax, which is calculating up here. So after you take your total income and factor in those deductions, that gives you an adjusted gross income of $68,000. So you've got your 50 W-2, your 20 from the business, and then minus these two deductions, it gets you to taxable income of $53,987. So then the tax on that, the income tax, is $6,927. That's just based on your regular income tax brackets. But then on top of that, you've got to pay self-employment tax, which is 15% of your business profit. So that comes into play right here, this $28.25. So that gets added to the income tax to give you this $97.53. That's your total tax. So then if you've had any income withheld from your W-2, you have to project forward to the end of the year how much you're going to have withheld. So you look at your pay stub and you should be able to see a federal taxes year-to-date number. So let's say there has been $2,000 withheld, and let's say you're halfway through the year, so you can divide by 6 months, multiply by 12 to give you your annualized withholdings. So that's how much you'll have withheld for the year. So total tax $9,700, you had $4,000 withheld. So the difference between those two is right here. Your outstanding tax bill is $57.53. So that's what you're still going to owe at the end of the year. That's the estimated amount. So you can take that amount, and if this was for the full year, you could divide by 4 and pay that quarterly. Or if you only have 2 periods left, you could divide it by 2 and split it for those periods. Or you could increase your W-2 withholdings to try and cover the rest of this amount. But this is a simple calculator you can use. The link's down below if you want to check it out yourself. And it's not going to be as significant, but you also need to figure out the impact that state income taxes will have as well, unless you're in one of the handful of states with no state income tax. So once you know how much to set aside, typically you shouldn't just let it sit there. The IRS wants you to send it in periodically in the form of estimated tax payments. So let's do a refresher on those. So first of all, do you need to pay estimated tax payments? Not all self-employed people are required to make estimated tax payments. It depends on how much tax you're going to owe at the end of the year. The simple rule is that if you're not going to owe over $1,000 at the end of the year in federal taxes, you're not required to make estimated tax payments throughout the year. You can, but you're not required to, and you won't be charged late penalties if you don't. Another rule to follow to make sure you're okay is to rely on the prior year. If you've already paid estimated taxes or had tax withheld elsewhere that are at least 100% of your prior year tax liability, then you're not required to make estimated tax payments. Again, you can if you want to break up the payment so you're not having to pay it all at the end of the year, but if you don't, you won't owe any late penalties. This rule is why you might have heard in the first year of business you don't need to worry about estimated tax payments. It's not always true, but it often is, because maybe the person has a W-2 job in the prior year where they had enough tax withheld from their paycheck to cover the taxes owed at the end of the year. Then in the current year, when they started their business, they still worked at that same W-2 job and had the same amount of tax withheld. In that case, they satisfy the rule that they paid 100% of last year's tax liability. And even though they'll owe more tax related to the new business, they're not required to break it up into estimated payments. And lastly, you can rely on the current year. If you've already paid estimated taxes or had tax withheld elsewhere that's at least 90% of your tax liability for the current year, then you're not required to make estimated tax payments. The trouble there is that you won't have an exact number for your current year tax liability, but if you can estimate it with reasonable certainty, then as long as you've already paid 90% of that tax during the year, there's no need to make any more payments. So the simplest way to pay those is just by going to irs.gov/payments and make sure you save your confirmation so you can factor it into your tax return at tax time. Alternatively, if you or a spouse have a W-2 job, a simple solution is to increase your taxes taken out of your paycheck. The business income and W-2 income all ultimately get lumped together on the tax return, so this will be a good way to do it for some of you. So let me know in the comments if you have any questions about how much to set aside or how to make estimated tax payments. And if you really want to get a hold of your tax situation, come join Reseller Tax Academy. For the first time in a year, the doors are opening back up in January. Use the link below to join the waitlist and be notified of the sale details. And you can also come join my free Accounting for Online Sellers Facebook group. That link and other resources are below, all to help you optimize your tax situation and overcome the anxiety so you can focus on building your business profitably.